What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Axel Christensen, BlackRock Chief Investment Strategist for Latin America. This week, we share 3 drivers powering outperformance in emerging markets. Emerging markets have had a stellar year so far. The return from global emerging debt is double that of U.S. Treasuries, and emerging market equities are up 20% versus the 14% for developed markets, according to MSCI indices. We identify 3 key drivers creating opportunities, yet see considerable dispersion across countries that demands a granular approach. First, many emerging market currencies are up against a dollar that has fallen around 10% this year against major currencies. A weaker U.S. dollar is typically associated with stronger relative EM performance. It also means that for dollar-based investors, any gains on emerging market assets gets amplified as they are converted back to U.S. dollars. Second, an improved macro backdrop is driving outperformance in many emerging markets. We see structural changes in several countries that bode well for durable growth. Plus, inflation has fallen back down to pre-pandemic levels in some emerging markets, and rate cuts are well underway. Impending rate cuts from the Federal Reserve will likely spur more countries to do likewise, since following the Fed reduces the risk of local currency depreciation. That's why we think now is a good time to lock in today's higher yields on emerging market debt. Each country has a unique combination of megaforces that drive returns in different places. That's why we seek out bright spots while staying neutral broad emerging equities on a short-term horizon. In the near term, South American countries like Chile and Peru, for example, benefit from demand from the critical materials needed for that low-carbon transition. Taiwan and South Korea are major players in developing the semiconductors needed for the AI build-out. Longer term, we think India can leverage its growing digitalization and younger population to scale into a cutting-edge digital economy. India's promise is one reason we hold a long-term strategic overweight to emerging markets. Here's our market take. A weaker U.S. dollar, an improved macro backdrop, and dispersion from megaforces are driving performance in emerging markets. We seek bright spots in equities and prefer local currency over hard currency or emerging market debt. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in, and if you enjoyed this episode, subscribe to Market Take wherever you get your podcast.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com/thebid.